Climate change is a critical global challenge that extends beyond environmental concerns to significant economic implications. One of the most impacted sectors is insurance. The frequency and intensity of natural disasters, such as hurricanes, floods, and wildfires, are increasing due to climate change. This trend translates into higher insurance claims and costs for insurance companies. To manage these risks, insurers may need to reassess their pricing models, potentially leading to higher premiums for policyholders, particularly those in high-risk areas. In some cases, insurers may choose to reduce coverage in areas prone to disasters, leaving individuals and businesses exposed. The real estate industry is also profoundly affected by climate change. Properties located in regions susceptible to climate-related risks, such as sea level rise, hurricanes, and wildfires, face declining values. These risks increase insurance costs and decrease property attractiveness to buyers and investors. Additionally, the long-term impact of climate change on property values remains uncertain, further complicating investment decisions in real estate markets. Investment markets are not immune to the effects of climate change. Industries reliant on fossil fuels, such as coal, oil, and gas, face increasing pressure as the world transitions to cleaner energy sources. This shift could lead to declining valuations for companies in these sectors. On the other hand, investments in renewable energy and sustainable practices are becoming more attractive. Companies focusing on green technologies and sustainable solutions are likely to see increased investor interest and potentially higher valuations. The financial impact of climate change extends beyond these sectors. Supply chains, agriculture, and infrastructure are also vulnerable to the effects of climate change, leading to increased costs and risks for businesses and governments. Addressing these challenges requires coordinated efforts from governments, businesses, and individuals to mitigate risks and capitalize on opportunities presented by a changing climate. Climate change is having a profound impact on the insurance industry, particularly in regions prone to natural disasters. For example, in the United States, the cost of weather-related disasters has been increasing steadily over the past few decades. In 2020 alone, the U.S. experienced 22 weather and climate disasters with losses exceeding $1 billion each, totaling approximately $95 billion in damages. Insurance companies are responding to these challenges by reassessing their risk models and pricing strategies. For instance, some insurers are using more sophisticated modeling techniques to better understand the risks associated with climate change. Others are offering new products, such as parametric insurance, which pays out a predetermined amount based on the occurrence of a specific event, such as a hurricane or flood. In the real estate market, the impact of climate change is also becoming increasingly evident. Coastal properties, for example, are facing rising sea levels and increased flooding, leading to declining property values. In Miami Beach, Florida, for instance, properties are experiencing regular flooding due to high tides, making them less attractive to buyers and investors. Similarly, in California, properties located in areas prone to wildfires are facing insurance challenges. Some insurers are refusing to renew policies for homes in high-risk areas, leaving homeowners with limited options for coverage. This, in turn, is impacting property values and making it harder for homeowners to sell their properties. In the investment markets, climate change is creating both risks and opportunities. Companies that are heavily reliant on fossil fuels, such as coal, oil, and gas, are facing increasing scrutiny from investors concerned about climate-related risks. For example, the coal industry has been experiencing declining valuations as investors shift their focus to cleaner energy sources. On the other hand, investments in renewable energy and sustainable technologies are on the rise. For example, the renewable energy sector has been experiencing significant growth in recent years, driven by increasing demand for clean energy sources. This has led to a surge in investments in solar, wind, and other renewable energy projects. In addition to the insurance, real estate, and investment sectors, climate change is also affecting industries such as agriculture and tourism. Agriculture is particularly vulnerable to the impacts of climate change. Changes in temperature and precipitation patterns can affect crop yields and livestock productivity. For example, in the United States, the agriculture sector is facing challenges from more frequent and severe droughts, heatwaves, and flooding events. These disruptions can lead to lower crop yields, higher production costs, and increased food prices for consumers. Similarly, the tourism industry is experiencing the effects of climate change. Rising temperatures and sea levels are threatening coastal destinations, while extreme weather events can disrupt travel plans and infrastructure. For example, coral bleaching caused by warmer ocean temperatures is impacting popular diving and snorkeling destinations such as the Great Barrier Reef in Australia. The financial implications of these impacts are significant. For example, a study by the Intergovernmental Panel on Climate Change, IPCC, estimated that the global economic impact of climate change on agriculture could reach $1.45 trillion per year by 2030. Similarly, the tourism industry is projected to lose billions of dollars annually due to climate-related disruptions. In response to these challenges, businesses and governments are increasingly recognizing the need to adapt to a changing climate. For example, some agricultural producers are adopting climate-smart practices such as drought-resistant crops and precision agriculture techniques to mitigate risks. Likewise, the tourism industry is investing in resilient infrastructure and promoting sustainable tourism practices to reduce its environmental impact. In addition to the industries mentioned, climate change also affects the energy sector. The transition to a low-carbon economy is creating both challenges and opportunities for energy companies. For example, as the world shifts towards renewable energy sources such as solar and wind power, fossil fuel companies are facing declining demand for their products. This trend is reflected in the financial markets, with some fossil fuel companies experiencing declining stock prices and market valuations. On the other hand, renewable energy companies are experiencing rapid growth and increasing investor interest. The falling costs of solar and wind power, coupled with government incentives and mandates to reduce greenhouse gas emissions, are driving the expansion of renewable energy projects worldwide. This shift is not only reducing carbon emissions but also creating new job opportunities and economic growth in the renewable energy sector. In the financial sector, climate change is increasingly being recognized as a systemic risk. The Task Force on Climate-Related Financial Disclosures, TCFD, has been established to develop recommendations for companies to disclose climate-related financial risks. These recommendations are aimed at helping investors, lenders, and insurance companies better understand and manage the risks associated with climate change. Climate change also has significant implications for infrastructure and supply chains. As extreme weather events become more frequent and severe, infrastructure such as roads, bridges, and airports are increasingly at risk of damage. This not only leads to increased repair and maintenance costs but can also disrupt supply chains, leading to delays and higher costs for businesses. For example, in 2017, Hurricane Harvey caused widespread flooding in Houston, Texas, disrupting the region's transportation networks and impacting businesses across the country. The total economic cost of the hurricane was estimated to be around $125 billion, making it one of the costliest natural disasters in U.S. history. Supply chains are also vulnerable to the impacts of climate change. Changes in temperature and precipitation patterns can affect the availability and cost of raw materials, as well as the reliability of transportation routes. For example, droughts in key agricultural regions can lead to crop failures, impacting food supply chains and driving up prices for consumers. In response to these challenges, businesses are increasingly focusing on building more resilient supply chains. This includes diversifying suppliers, investing in alternative transportation routes, and incorporating climate risk into supply chain management practices. By taking these steps, businesses can reduce their vulnerability to climate-related disruptions and ensure the continued operation of their supply chains. Another area where climate change is having a notable financial impact is in the realm of public health. The changing climate is leading to an increase in heat-related illnesses, respiratory problems due to poor air quality, and the spread of diseases carried by insects and animals. These health impacts not only place a significant burden on healthcare systems but also result in productivity losses as people are unable to work due to illness. For example, a study published in The Lancet estimated that climate change is already causing tens of thousands of deaths annually due to heat waves, poor air quality, and the spread of infectious diseases. These impacts are expected to worsen in the coming years, leading to even greater health and economic burdens. In response to these challenges, governments and healthcare providers are investing in public health infrastructure and initiatives to better prepare for and respond to climate-related health risks. This includes implementing heat action plans, improving air quality monitoring and regulation, and increasing vaccination efforts for diseases that may become more prevalent due to climate change. In conclusion, the financial impact of climate change is vast and affects nearly every aspect of our economy and society. From insurance and real estate to investments, infrastructure, and public health, the costs of climate change are significant and growing. Addressing these challenges requires bold action and collaboration from governments, businesses, and individuals to reduce greenhouse gas emissions, adapt to the impacts of climate change, and build a more sustainable future for all.